If you look right now at what's happening in both Europe and Asia, the deceleration, contraction in air freight volumes, it's no surprise that FedEx, being the biggest deliverer of e-commerce, big air freight carrier out there, is struggling to make results. When the number of things you need to do goes down, the amount you get paid and the amount you can earn goes down as well.
What's your take, Donald, as to the key factors behind this and whether it's going to bounce back quickly? I mean, clearly, international macro conditions and weaker global trade has been cited. The valuation this is at, if those things turn around even a little bit, is this stock a buy?
Oh, absolutely, absolutely. But the big question is will the trade tariffs, the trade talks continue? Will that continue to put a damper on global commerce, as it is obviously clearly doing? Once that's gone, once that controversy is resolved, then even at the lower numbers, shares look very inexpensively valued. But the bottom line is that not in the U.S., but certainly in Europe and especially in Asia, we're seeing very significant decelerations in the amount of air freight that needs to be moved.
I mean, you get so many good juicy quotes, Mike, in the release of a FedEx. Moderate, these forecasts, they're talking about the outlook, assume a moderate U.S. domestic economic growth picture, no further weakening in international economic conditions from the company's current forecast. The question is, are we going to get the same sort of message from the other global, industrial, macro exposed companies?
I think that's a tentative way of saying that the worst is probably known, if not behind the company, right? So they're not modeling further deterioration. Right. I think you could, in a different type of a stock setup, as I said, you could probably look at that as a net positive, but FedEx has to prove it.
Donald, why have they been trailing UPS in performance in the market?
Well, I would, in their defense, I'd jump in there. If you go back 90 days when they made their release, they were the first to come out and say, we may have a real problem here in Europe and in Asia, but especially in Europe. And then it was after that, everyone subsequently came out. They were out there in front of the news. So as a result, the stock suffered. But the bottom line is that what they were started talking about 90 days ago in their previous release is what now everyone's come to realize is the truth. So hopefully they continue to be out in front of it, the stock will reflect it as the volumes begin to improve.
Kate Rogers has been digging through this one. Kate has a little bit more on the outlook, Kate.
Hey there, Sarah. That's right. So we mentioned that the full year EPS guidance is a bit weak, but looking at Q4 in particular, they're guiding with an implied range of $4.58 to $5.38. Now, the estimates were calling for $5.39. So obviously the high end of that range is just a penny below, but if it comes in anywhere, in the mid range or toward the lower end of what I just told you, that could be bad. And again, the stock is down nearly 4.5% now.
Okay, Kate, thanks very much for that. Alicia, clearly moments ago, taking this as, the past quarter kind of spoke to your idea that the worst is out there in terms of international growth. When you see guidance coming down as well, which has been a theme coming through a lot of companies' earnings over the past quarter, does that not concern you?
It concerns me to the extent that we have not gotten a trade deal yet. So one of our key risk factors for the market this year and for the global economy is, can there be a trade deal with some teeth that can actually get global trade flows going again? So we'd like to see that by June. And if you get that going by June, then you could have a second half much stronger. And as we know, most companies bring numbers down enough so they can beat it ultimately at the end. So I suspect that there's a little bit of gaming the system at this point, because there are so many unknowns in what's happening with trade, what's happening with the deal, what's going to be happening with CapEx and all that related to the deal.
So FedEx shares continue to sink after hours, down 4.5%. UPS shares, interestingly, have turned lower in sympathy after hours, down about 1.5%, Mike. And we're wondering if this is going to be a trend this earnings season. Yes, we might have a kitchen sink quarter, but what about the outlook?
Yes, I mean, obviously, FedEx is so close to, I guess, the epicenter of what's not going right in the global economy that I don't know if we don't want to extrapolate it. But look at how the market's behaving. What's been pulling the market higher in this last phase? It's been the NASDAQ 100 type stocks. It's been large cap growth. It's been all these names that are not dependent on the economy turning on a dime and getting better. And that's sort of the market's way of saying, look, this is kind of the world we thought we were in. Yes, hopefully we kind of inflect for the better relatively soon. But right now, we're just getting exposure to the big companies that we think can do okay no matter what.
Don, last word to you. What do you need to hear from the earnings call to keep you as a buyer of this stock?
I think I need to hear continued explanation about how all of their initiatives, adding a sixth day to ground, their profit improvement plan, their continued improvements in technology, how they're building the company so that they can make money whether volumes are up or down, because they can't control the overall economy, but they can control how well they do in it. So more explanation of how they're doing and how well they're executing on their multiple initiatives.